All right, time to have a look at Blackboard assignment number 3 and the solution for that. And so, for just to do that, I've actually set up this Excel file that we can use to keep track of everything. And I've got you should have a copy already of the original assignment. Let's just start plugging this thing in. There was marks here to be had for making sure that you had the right name, statement of cash flow, and for the year ended, just like the income statement, December 31st, 2021. So here on the net income side, we had net income $172,800. That's coming right off the income statement uh, that was given to you. And then we look at the amortization expense here, which again was given to you. So in the operating activities, we add back the $25,000 amortization expense and the loss on disposal of equipment. Those two specifically needed to be added back. Then if you analyze the current assets and the current liabilities, you'll find that you've got a couple of things in here. The increase in accounts receivable is $54,000 hit to cash flow, and the increase in inventory is a $28,000 reduction of cash flow. We've seen a decrease in prepaid expenses, so that will create $3,000 worth of cash. And the increase in AP will also increase the cash by 17,000, and the increase in salaries payable should increase it by 2,000. So we should end up with net cash inflow, important to say inflow, from operations of $183,800. Then we got a little bit of homework to do here. We've got to do a couple of recaps. And so the first one we're going to look at it actually is the property, plant, and equipment recap. So we know the opening balances by looking at the ending balances for 2020, and that was 215,000 in cost and 80,000 in accumulated amortization. And in the narrative that follows the income statement and the balance sheet and the income statement, you'll see that we're told that new equipment costing 119,000 was purchased during the year. And so we've got that one right away. We know that amortization of 25,000 was recorded during the year. And we've got this sale of equipment we've got to tackle. So there's a little bit of information here, but we don't know lots about it. It's inferred that you should be aiming for the numbers that you have on the balance sheet, which is for these numbers, we expect to see 264 in this number here. So to get to 264, that means we have to subtract $70,000 worth of cost, and we end up at 264,000. And then here on the amortization side, well, we're aiming to get to 96,000. So if you're going to get to 96,000, well, that means that you should have reversed $9,000 worth of accumulated amortization. So we end up with a net book value here of $61,000 worth of equipment that we've removed from the property, plant, and equipment. And we look at the income statement, and it says on there that we've lost $46,000. So if we've lost 46,000 and we had a book value of 61,000, that means that the proceeds then were only 15,000. So right here, proceeds on sale of equipment, $15,000. That's positive cash flow. On the purchase of equipment, initially we're going to write down the 119,000 that we know that we bought that. We're told that that's how much we bought, and that works with our property, plant, and equipment recap. So 119,000, we'll put that in there initially. We're going to come back and revisit this. And then purchase of long-term investments, it's just a matter of looking at it, and you'll see that we bought the long-term investments balance has gone up by $47,000. So that cost is $47,000. So that's fair enough. That looks good. Now we're into the financing activities, and we've got to deal with a couple of recaps on that. We'll start here with the retained earnings. So the retained earnings, we know the opening number. They give it to us on the balance sheet. The net income number, we know that number. It's right here, and it's right on the income statement. It's 172.8. The dividends number, we don't know what the dividends are, but we know that we're aiming for a number here in retained earnings of 145,000. And to get to the 145,000, then we need to, we can add these up if you like. Take those two and add them together. We get 230,000. We're aiming for 145. So to do that, we need to subtract, and it's $85,800 is what we need to subtract from dividends to get the retained earnings to work. So right down here in the financing activities, payment of cash dividends, that's a cash outflow of $85,800. We can look at the common shares since we're there. Common shares, you'll see it goes from 105,000 to 265,000. So that is an increase of $160,000. So we issued $160,000 worth of common shares for cash. That's going to create some cash. Then that bank loan. We know that on the purchase of that $119,000 worth of equipment, we borrowed all but $30,000. We paid $30,000 in cash. So that means we got an additional loan of $89,000, which is just fine. But the loan balance at the end of the day was $145,000. So how much then did we make for payments on this loan? Well, you can see together here, we've got $284,000. So that's how much we had in sort of beginning balance and additional loan. And we've got to get down to 145. So the difference, we'll put that right in here, equals 284,000 minus 145,000. We should be, that means that we've got $139,000 in payments on that loan during that time. So right here in repayments of loan, 139,000. So that gives us a net increase. Well, it should be a net increase in cash, but there's a bit of a challenge here because when we put in this 139,000, we should also be putting in a line in here that says that we've got a new loan for 89,000. That's actually a financing activity. So right now we can pop that in there, and so we'll put advance, or actually we'll put it proceeds from bank loan, and so that would be $89,000. So when you add that in there, and we just better add them all up there, so let's go like this. There we go. So we end up with, no, that's not right either. 139, 160, 85, 8. That should be correct. What am I doing here? Let's try it again. Plus, yeah, that's right. 89, yeah, 139. Yeah, that should be right. That's right. So our net increase in cash is $57,000. That's the operating activities with a net cash inflow of 183.8. Net cash outflow for investing activities of 151,000, and net cash outflow from financing activities. Well, this is not an outflow. This is actually positive. It would be an inflow, but we've got a little trick coming around the corner here in just a second. Add these all up and you get a $57,000 increase in cash. The opening balance in cash right from the balance sheet is 43,000. And the closing balance is 100,000. So this actually works. These are free marks. You can get all three of these numbers. You can get these two numbers right off the balance sheet, and that's just the difference in those two numbers. So free marks, don't forget that when you have to do that, maybe on a final exam. So in this case, yeah, it'll balance, but this is where the twist comes in. So on here, we have some non-cash investing and financing activities. What happened was we bought that equipment for $119,000, but we got an $89,000 loan. So we didn't actually pay out $119,000. We paid out $89,000 less. So what we do is we actually remove this line right here, the proceeds from the bank loan. We get rid of that, and we're going to also take it out of the purchase on equipment. So what we do is we end up here, if we just delete this line right here, and we'll end up with a bit of a problem here. We'll go like that. And then in here, we got to do the same thing. So we, instead of buying 119,000, we actually have to take out $89,000. And so we only end up with a $30,000 cash outflow for the purchase of equipment. So that ends up working out just fine. We still end up with the same 57,000. We remove the non-cash investing and financing activities, and we've recapped everything, and yeah, it all seems to work out. So the marks were there for having the title. If you had the right captions in here, you're getting half a mark. If you got all these numbers correct, again, half a mark for each. There was bigger marks in here for investing and financing activities. 1 mark for the numbers, 0.5s for all these captions, and 0.5s for, again, for all of these numbers. There was 1 extra mark, and you needed to catch this one. It was part of the second part of the question, but yeah, you needed to talk about this purchase of equipment financed by bank loan. So that's how you should have done on that one. Hopefully you did real well.